Well, fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally, and we do that by buying treasury bills. That actually increases the money supply.
Financial Turmoil Explained.
Good day, and welcome to the show on this Thursday the 28th of April, 2022. And I'm glad to have you guys here. Now listen, we are on the end of a credit binge that's went on for like 40 years. And, you know, it started to pop in 2008, and the Fed didn't let it. They increased the credit. They doubled down on everything, right, in 2008. And that's extended us to where we are today. But now the Fed is taking action to try to so-called fight inflation, and they're going to pop all these bubbles. I can't begin to tell you guys, but see, here's the thing, is my timing's been a bit off. I know this is happening right now, and the end result is instead of taking the medicine, what they're going to do is they're going to let the impact fall on the dollar, on your dollars that you have in the bank. You got to do something to protect yourself, and you got to do it soon. There's not much time left, guys. This is closing in fast now at this point, and I know I'm kind of glad I was wrong about the dates. I thought it was coming sooner. I thought it'd be here by now, and I thought we'd be in the profoundly high inflation by now that I forecast. Yes, we have inflation, but it's not profoundly high like I thought it would be by now. The impact has not really been felt of this. The Great Depressionary impact, and then the impact of the Fed coming in and destroying the currencies. For you people out there listening in my audience have been listening a long time. You know I've been right, but my timing has always been a little bit off. You've got to prepare for this. And I know that silver and gold's been going down in price. Bitcoin has been kind of just meandering along, not really doing anything, staying around 40,000. And I know that these are your hedges out of the dollar and out of the fiat currencies, but you guys got to pay attention now, because right now we're in this final conclusion, and that final conclusion, that's when it can go really fast. I want to get in there and I want to look at the markets. We're going to open up the charts right here and get them started. So the first thing we're going to take a look at is Fed's Bullard says that they need a 75 basis point hike. It could be an option. Now, what they've been talking about is 50 basis point hikes, which are a lot. Those are big hikes. But a 75 basis point hike is a really big move by the Fed. And this isn't going to stop the inflation. All this is going to do is burst the bubbles that are out there right now. This is the biggest story. This story I'm covering right now is a bigger story than the coronavirus was. It's a bigger story than the war over in Ukraine. This is the biggest story out there. The story that the entire world's financial system has been corrupted over a 100-year period in an enormous Ponzi scheme, and this is getting ready to burst. And if you don't protect yourself, I mean, you're going to lose all your money. It's as simple as that. So I got to reiterate this. I got to go over this with you guys, because a lot of you guys that are tuning in right now, this might be the first you heard of this. You never heard of this before. Some of you guys tune in my station and say, Glenn, you know, you've been talking about this for a long time. You've been telling us about this. Yeah, I'm preaching this message because this is the biggest story out there. The story that the world's financial system is going to need some sort of a reset. And how do you reset this thing without destroying thousands of people out there? Okay, they're all invested in the dollar. You just can't come along and say, hey, you know, we're going to reset into some new type of newfangled currency. And, oh, by the way, your dollars now are worthless, without destroying everything. I mean, you're making it the dollar worthless. The dollar's embedded in everything. You know what your car's worth, what your house is worth. You got to think carefully about this whole thing, the extending circumstances that can come about from some sort of a reset. And this is unavoidable. They're heading toward it. So what are they going to do? Well, the answer probably going to come up with central bank digital currencies. That ain't going to help. That's just a change from the old garbage fiat into a new garbage fiat that's digital. Still, it's going to go down, you know. Gold, silver, cryptocurrencies are waiting to pounce on this situation. Meanwhile, right now, while the Fed is doing this tightening process, which is basically a big bluff, we see gold and silver and cryptos not doing well. Let's take a look. Get in there and take a look. We're seeing down 23 cents on silver. Look, 23.04. Have you seen the price go? The price is going down for this paper. This is all paper. This is a paper price. But they don't have the amount of underlying metal to cover these prices ultimately. They're getting down near mining production costs because fuel prices went way up. This is serious, guys. They're going to run out of supply very soon if they keep on doing this kind of stuff, you know, because people that got money out there, you know, they're looking to hedge and they're thinking, hey, this is a great time while gold and silver are down. Look, gold at 1884. Well, what's crypto doing right now? Let's take a look. We're seeing cryptocurrency 1821. Crypto's bounced back just a little bit. It's trying, you know. I mean, but it's having a hard time too. It's struggling right now. There's a strong headwind, and this is the treasury yields, you know, especially the 10-year, which we're going to take a look at in a minute. But here, taking a look at Bitcoin, is 39,750. It's been struggling around that 40K mark. 40,000 for Bitcoin. Let's take a look now at the Dow Jones. It's up 258 points on the day at 33,484. Dow Jones hasn't went anywhere in over a year, and so this means that the Dow Jones has lost 15% basically, because we've had 15% inflation for the last year. You hauled your stocks out last year, you got the same price, and you haul them out this year, you get the same price as last year pretty much. It's been hovering around 34,000, but your dollars have lost 15% of their purchasing power in the last year, roughly. And it's going to get worse, you know, before it gets better, because they're not going to be able to stop this. Paul Volcker had to try 3 or 4 times. You know, I think he tried 3 times. He brought it up to the 10-year up to like over 15%. They can't go anywhere near that. They wouldn't be able to service their debt. Back then, they only had less than $1 trillion and $900 billion worth of debt. Now they got over 30 times that much debt. And, you know, it has to be serviced. This means a low rate of finance for the United States debt. They can't have a 15% 10-year. They can't cover that. Anyway, looking at 33,484 in the Dow. Let's take a look now at crude oil at 102.02. This is going to close in very soon. The whole thing. When it happens, it's going to happen fast. That's because when people get word that the dollar's really going down, this is all real, and it becomes real to them, they're going to try to get out of the dollar then, and then that increases the speed it goes down. So it makes it more of a sudden kind of thing, you know, where it happens really fast. But you wait for it for years, and it's just kind of slowly leading there. And then when it finally goes, it's kind of like a building when you're trying to tear down a barn or something, you know, and you're pulling on, you got chains hooked up to it, and you get tractors hooked up to it, and you're pulling at it, and it's leaning, and it's not going anywhere. You go home for lunch, you come back, you do some more pulling, you know. But finally, when it falls, it just goes kaboosh. After all that pulling, it just goes kaboosh, falls right over like in 5 seconds. After you've weakened it substantially, and that's what's happening to the dollar right now. It's been slowly weakened. The Chinese, they're doing trades with the Russians, and the Russians are doing trades and oil trades, and they're moving out of the dollar, creating their own SWIFT system, and it just slowly the dollar's being eroded. And then the final stages, poof. And that's what we're preparing for. That's what we're watching here. Let's take a look at the MOVE index now. If you see this over a year period, you see it creeping up, and increased volatility here. It's 130 today. This is your credit markets. This shows a window into the stability of the credit markets, and it shows that it's slowly disintegrating, heading toward this final ice 9 situation where the credit markets freeze up, And you guys, when that happens, that's when you're going to see a bank holiday. All of this is coming at the same moment in time. When the whole system goes down, your dollar loses value. It's all working toward that. And it's coming. It's not far away. I know I've been saying it's coming for a long time, but when it gets here, it's going to be so fast. You ain't going to have time to prepare when it gets here. You got to prepare on this side. This is your time to prepare. This is when gold and silver are cheap right now and getting cheaper. Cryptocurrency is a good buying into opportunity. Your dollar, still has some purchasing power. This is a time to prepare not only just your finances. You got to prepare yourself mentally for what's coming. You got to prepare yourself physically for what's coming. You got to know your neighbors. You got to have resources put away for yourself. Food, canned food's great. Different things that you can have. You got to be careful. There's why I say canned food's great is because insects and bugs and stuff can't get into it, and rodents and things like that. Your only thing is, you got to protect that from freezing canned food. But anyway, let's take a look at the 10-year here. 10-year at 2.81. Now, what we're taking a look at right now is a 5-year chart of the 10-year. And what you can see, we did go up to over 3% there back in 2018. And then we went through the lowest of the lows here. It was down to 0.53, 0.5% on the 10-year there back in 2020. And now we're going through this bounce. This bounce, if we go back and we take a look at the all chart here, this is like 30 years or whatever. And what you can see here is, you see the Paul Volcker era, over 15%. You see this slow slide off. Now this is a bull market in bonds. This lasted for like way back in the early 1980s. It's like a 40-year bull market in bonds. And have we broken free of this bull market? No, not yet. Not yet. If you look at the trend line right here, you can see we haven't broken free just yet, but we're close. We're close to it breaking free of this trend line. If it continues up any higher than it is right now, we're at the peak we can go on this trend line and not break free and not have a breakout. In other words, a crash in bonds. We're close, but no market goes up forever. And look at this thing; it's went up since 1982. It's just been a constant bull market in credit. This is an extension of credit. We've extended credit to every aspect of society, including the third world and all these emerging markets. It's a credit extension. Anyway, my chart's just ended, but I'm going to tell you guys what the U.S. dollar's at. It's at 103. It's really riding high and strong right now. That's because of what the Fed's doing. We're going to have a crash in the dollar when the Fed stops what they're doing, and they'll have to stop suddenly, because at a certain point, if they don't stop, if they continue, they're going to create a worse than the Great Depression is what they'll create. Deflation will come to the fore, and they will stop then. And when they stop all this, talk about a reversal. It's all down to the Fed. What was this I had on here? Oh yeah, fires. I can't show you guys this chart. I was going to show you guys this chart. There's fires popping up all over the United States of America. And this is from the Fire Information Rescue Management System of the United States government right here, this chart. Over the next 100-year period, what it looks like to me? It looks like the deserts are going to grow in the Dust Bowl of the United States. It started to do that back in the 30s during the Great Depression. But it looks like this time it really means business. So, drought across the United States. They've sucked so much water out of the aquifers and stuff, the underground rivers in different places. Where I grew up down in Florida, they were always sucking from the aquifers, occasionally there would be a sinkhole caused by their sucking all the water out of the aquifer, using it to water things like golf courses and orange groves and everything else, and depletion of the U.S. water supply. And the deserts will just expand. They'll grow. They'll get bigger and bigger, and less productivity, less and less productive areas to produce food as the world's population's growing. Anyway, thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.